Welcome to the Bitcoin Suits podcast, where financial and tax advisors come together to explore the role of Bitcoin in modern planning and client services. I'm your host, Jordan Guess, a CPA and a Bitcoiner, working at the intersection of traditional finance and the future of money. Alrighty, hey guys, welcome back to another episode of the Bitcoin Suits podcast. Today we've got Rajat Soni joining us. He's a CFA and a Bitcoiner, and I'm curious to jump into the conversation and understand how he sees this asset class, I guess we should say. And I know based on my following of you on Twitter, I know that you see things a little bit differently than a lot of people in your with your the three letters behind the name. So maybe give us a little background and help us get to know how you got into Bitcoin and what did you do prior to going down the Bitcoin rabbit hole.
Yeah, absolutely. So my name is Rajat. I started working in finance. I worked in various areas of the finance industry. So I worked in a lot of financial services. And then at the end of it, I worked as a fixed income analyst. So in the beginning, I was working as a financial services representative at my local bank. Then I went to work at a brokerage for a few years. And then I worked as a business analyst for that brokerage. And then I started working in TD Asset Management as like I said, fixed income analyst. And while I was working in those jobs, everything was great. I mean, I got paid well, but people didn't really. I guess the difference between before Bitcoin and after Bitcoin is that I didn't really think about how. Um, I didn't really think about whether the current financial system could be challenged. And now I think about that a lot more. So before I thought, okay, we're going to use currencies forever. We're going to use dollars forever. I didn't really even quite actually. I mean, I didn't think of that. It just didn't come to my mind.
Hmm.
It was just a normal thing. Like, okay, we use currencies every day. Perfectly fine. We'll continue to do that forever. It was just like the status quo. You don't question the status quo, right? So at the time, I just thought, okay, we're going to keep getting yield. We're going to keep getting rental payments. We're going to keep buying as many houses as we can. We're going to keep buying stocks. We're going to keep buying bonds. We're going to keep earning dividends. Now I see it differently. So now I see it as we don't need any of that. We literally need none of that. We don't need to buy rental properties. We don't need to buy index funds. We don't need to buy really anything in the legacy financial system. All you need is Bitcoin and a little bit of cash. So I have a video where I just explained this. You can, let's say you have a really big portfolio, you could put a percentage of it into Bitcoin and then put the rest of it in cash. You'd be better off compared to owning real estate because you have the cash and that's what the cash flow is for. Of course, the real estate keeps producing more and more cash flow, but the Bitcoin will appreciate faster than you'll accumulate cash flow.
Hmm.
Like
Okay.
it not accumulate. Sorry, it'll grow faster than you can accumulate cash flow,
Right.
right? So it'll grow at like 20, 30, 40, 50% per year, while your cash flow is going to be maybe, I don't know, 4 or 5% of your property per year, 4 or 5% of your stock per year. And then the majority of your dividends, the majority of your rental income is just going to go to maintaining the property. So you don't even really make any money. I mean, most people are just speculating on real estate at this point. They just want to buy real estate because they think the value is going to go up.
Yeah, and there's the whole. I would see, from the tax standpoint, we always see real estate as it's in a class of its own in terms of how you can leverage it. Uh, basically maybe make money, but also at least it's treated better than other assets on the tax front. Would you agree with that? I guess.
Oh yeah, definitely. It's treated way better. But keep in mind that that wouldn't happen without fake money.
Absolutely. No, definitely. The government basically places it in a higher position than other asset classes. Um, and I think we're going
Sorry,
to a world there with Bitcoin where similar, at least taking loans out against your Bitcoin. I'd be curious to get your thoughts on that. But that whole idea of, well, Bitcoin's going up, so it's understandable to take a loan out against a small portion of your stack, potentially live off of that, and then refinance the loan in 3 to 5 to 10 years, and then pay off the old loan, and then use the net new proceeds from the loan to continue down that path, right?
Yeah, no, completely. I completely agree. I just want to mention,
Mhm.
because governments can provide tax benefits for real estate, they've kind of skewed the market to to look the way that it does. They've skewed it so that people can't afford their primary residence. They can't afford to pay rent. So many more people are going to go homeless, and it's intentional. Oh, back to what you were saying. The loans, completely agree. I used to be against the loans. I didn't really like the fact that you have to give somebody your Bitcoin. Um, but depending on how much Bitcoin you have, let's say, for example, you have a significant amount of Bitcoin, you probably wouldn't want to do this if you have a small chunk of Bitcoin. Let's say you have, let's say, I mean, not even a small chunk of Bitcoin, but relative to your monthly expense or your annual expenses. So let's say you have, let's say your monthly expenses are 100K or your annual expenses are 100K and you have one Bitcoin. You
Mhm.
can't retire
Right.
because you're gonna have to sell your entire Bitcoin stack in order to pay for your expenses. But let's say you have one Bitcoin, and your expenses are, let you live in a country where the expenses are low, cost of living is low. Let's say you have $5,000 worth of annual expenses, and that's possible in certain areas of the world. $5,000 worth of annual expenses. If you have one Bitcoin, you can retire today. What you
Yeah.
could do is you could borrow against 10% of your stack. Um, borrow against 5% of your stack. You have to give twice as much as collateral, so 10% of your stack would have to go to whoever the lender is. You'd be able to borrow $5,000, pay for your expenses.
Yeah.
Over time, though, the issue with this is that in year two you may have some difficulty. So in year two, let's say Bitcoin rises at 30% per year, you're not going to be able to really borrow that much money. So what I would say is wait until your stack is 20 times your monthly expenses. Oh,
Okay.
sorry, not 20 times, 40 times your monthly expenses. And I think that's possible. 40 times your monthly expenses is going to happen a lot quicker than you think. That way you can borrow against 5% of your stack. You give your lender 5% of your stack, and then you borrow against 2.5% of it. So your maximum risk at any time is 5% of your stack. So you're borrowing against 2.5% of it. Let's say you wait a few years. Um, the value of the collateral that you give them increases, just like you said. You refinance that loan, and then you can pay back the old loan, and you can borrow more money in the future to pay for your future expenses. So it just it snowballs over time, and it becomes so powerful. Nobody can stop it. Nobody can prevent you from taking these loans, and then you don't have to pay taxes on the proceeds, which is the craziest part.
Absolutely. Yeah. Yeah, that's interesting to see that play out on the individual level over time. Do you have any thoughts on the corporate bond market and the Treasury bond market as Bitcoin tries to find its place to fit in those markets? You know, I'm headed to DC. I'd be curious if you're going to the BPI event next week, but I know that that's going to be a topic of discussion is these bit bonds. Do you have any strong opinions on the bit bonds movement and how that might help us climb out of the fiscal, disaster that we find ourselves in as a country?
I think that what I know about bonds and Bitcoin, just putting them together, is that people want a fixed return or they want a continuous cash flow, and Bitcoin doesn't do that. So I think there's going to be products that spin off of Bitcoin. Let's say Bitcoin gives you a 50% return. These products will give you a 7, 8, 10% return. I think so. I've watched content from people who say that the new preferred shares from MicroStrategy are headed in that direction. Let's say they give you a 10% dividend, and eventually they can be converted into MicroStrategy shares, the class or the common stock, but they'll give you a dividend for as long as you hold them. So I think that's extremely powerful. That's taking a lot of the value that could potentially take a lot of the value out of the bond market. I don't know how long that'll take. I have no idea how long that'll take. I don't even know if this would be as safe as the bond market. I mean, how long will MicroStrategy be able to pay those dividends? Will they have to sell their Bitcoin to pay those dividends? I don't know the details on all that, but if their return keeps outpacing the dividends on their preferred shares, then I think they can take over the entire bond market. Why wouldn't they be able to, right? The bond market is $300 trillion. Maybe not the whole, obviously not the whole bond market, maybe a significant chunk of it. And that's basically that. I would say that's like a Bitcoin bond, right?
Yeah.
Would you agree? Would you agree that that's like a Bitcoin bond?
Yeah, definitely.
Yeah. So yeah, I do think that that could happen. I think that companies are going to issue their own instruments, and they're going to try to take as much value out of the bond market as possible, because today, keep in mind that the US government is a major player in the bond market, and they can just create more dollars to pay back whoever lends them money. They can print more money to pay it back. In terms of Bitcoin, uh, maybe at some point we'll have Bitcoin yield, like people paying you in Bitcoin instead of paying you in fiat.
Mm,
But if fiat collapses, then I think the bond market has to collapse. I don't think that we're going to have the same kind of bond market that we have today. And of course, that's going to take some time. That's going to take a very long time. At some point, everybody on Earth will not want fiat currencies as payment for the value that they create.
right.
In that case, bonds don't really work. So, I mean, the problems that the U.S. is having with their debt, I think that it'll just be resolved on their own, because U.S. dollars are going to just be so much easier to come by. So they'll be able to pay back their debts much more easily. I don't know how long that'll take. I mean, keep in mind that I'm not an expert on this. This is just me speculating.
Yeah. So I guess to pivot, talk me through. So you don't work at your old job anymore. Talk me
No,
through what's your day to day look like these days.
I'm a content creator, so I just create content on YouTube, on X, um, and I do one-on-one meetings,
Okay.
consultation. So let's say, for example, if somebody has trouble with pulling the trigger and buying Bitcoin at some point in their life, let's say they've been studying it for a while, um, they just can't. They can't. They can't deal with the risk of having to give away their dollars to buy this virtual thing.
Yeah.
And those are the people that book a lot of meetings with me, because they need help with the first step. And I think that's the biggest audience right now. Keep in mind, 95% of people have no Bitcoin,
Right.
right? So those people, they come to me and they basically want encouragement in a way, and then they want to learn a little bit more about Bitcoin. So I answer any questions that they have, and it's been great. I love it. It's been so much fun, because I feel like I'm having an impact, and I'm seeing people who had meetings with me, let's say 2 years ago, 3 years ago. They're emailing me. They're saying this was the best money that I spent,
Hmm.
because
So
now I bought Bitcoin. I didn't have it before. Now I get it. Now I'm buying consistently, and it just compounds and compounds over time. I've been getting a lot more meetings. A lot more people want to meet with me, and it's been great. And I'm having fun. That's the best part of it.
yeah, no, that's great. So it's interesting because the audience that we're shooting for on this podcast is financial planners, advisors, CPAs, people who are practicing their craft, whatever it might be. And it's a mixture between people who are already down the rabbit hole and they're just trying to figure out, is there a way for me to work this into my existing client services, um, or client service offerings that I do. And then, more and more over time, I would hope that there are normies or people who are not down the rabbit hole, right? That want to learn. And so I'd be curious to know, from that standpoint, especially on as it pertains to the CFAs, you know, how would you encourage a CFA to basically go down the rabbit hole and learn more about Bitcoin? And or does it make sense? Do they have the incentives aligned to even really do that? Or do we actually have to in some ways overhaul um just the incentives, I guess, of the financial planning and analyst kind of community to make it so that Bitcoin does fit better into their business model.
I think the incentive to go down the rabbit hole is worrying about your own finances. If you continue to just buy index funds, you're going to massively underperform against anybody who holds Bitcoin. Even if somebody has no finance background, they have no financial education. If they hold Bitcoin, they're going to outperform you, and you need to understand why. That was my incentive. I needed to understand why. I read the Bitcoin standard. I put in the time before I could do this. Before I could run this business, it took me 3.5 years of really understanding Bitcoin at a very deep level. And now, if somebody has any kind of questions for me, I'm not a technical guy, so technically, maybe like the code, I can't write code or anything like that. So if somebody has a question about that for me, I won't be able to answer. But if they have a question, like let's say they want to ask me some kind of pushback on Bitcoin, why wouldn't I just buy index funds and Bitcoin? Why would I need to hold cash? I can answer all of those questions with confidence because it took time,
Hmm.
it took a lot of effort to get to that point, and now I actually do what I preach. If you don't do what you preach, then you can't. It's very difficult to have conversations with people. There's people. A lot of people have a bullshit filter,
Hmm.
and if you're bullshitting, they'll figure you out. They'll see it.
Yeah.
So if you have consultations with people, let's say you're a financial advisor and you don't actually believe in Bitcoin, you're having conversations with people, you're charging them $200-300 an hour, and you don't actually understand it. They're gonna sniff you out in the first few minutes.
Yeah.
It's extremely difficult to have conversations about this without a knowledge of Bitcoin, and I think that's the start. That should be the incentive. Building your own portfolio, because if you don't build your own portfolio, then your clients are going to outperform you. That's kind of sad.
Right. Yeah, I would say that it seems like, if Bitcoin continues to do what we've seen it do, um, if you're a financial advisor specifically, and you're not advising that there should be some allocation to this asset, you're going to get fired, right? Right? Someone will leave to either just go full on DIY. And I think candidly, there is a world that you and I probably agree on this a ton, that in a Bitcoin world, financial advisors may have to play a much different role,
Yeah,
right? Because
agreed.
it's just much simpler to manage money by just buying Bitcoin than, as you would know way better than I do, craft this very extravagant, complicated portfolio
Yeah,
of a mixture of all these different things that
whole
all
life insurance,
clients would
stocks,
never
real estate, all
understand
this.
the intricacies of this specific bond fund or
Yeah,
this specific international equities fund. and so you're going to pay me this AUM fee, and I know all the answers. Versus, like you said, someone, a smooth brain type of person is just like, I'm just going to buy Bitcoin
yeah,
and I'm going to outperform all of
easy.
these complicated things. So all that to say, I guess, how do you just see it where people still will have to rely on other people for the management of their money, especially at certain wealth levels? It's just not something that they're going to do on their own. And then I guess there's always going to end up being the financial planning of someone looking over your shoulder to say, hey, what were the goals that we set 3 years ago? Have we met those goals? Um, like, that doesn't go away with Bitcoin, I guess. Would you agree with
No.
that?
I think you still need to set those goals. You still need to know, okay, I need to put this much money towards this portfolio. I need to do this. I need to do this. The financial advisors will still be there. They'll still play a role in that. But I think that over time um, they're going to have a smaller role because you can do everything on your own. You don't need somebody to hold your Bitcoin for you. I think that's one of the keys. With the current financial system, you need a custodian,
Hmm.
and those custodians have to hire people, and those custodians have to find ways to generate more revenue from their customers. So over time, with Bitcoin, you don't need that anymore. Over time, as people figure out what Bitcoin is, Bitcoin becomes your insurance policy, Bitcoin becomes your savings, Bitcoin becomes your investment. It becomes everything. You don't need an investment industry on a Bitcoin standard. You can still invest. I'm not saying you don't invest. You can still, your people are still going to start businesses, but I think there's going to be a lot more private businesses rather than public. The way that things are today with stocks, I think it's going to be more private businesses. Like me and you, after Bitcoin, we started our own businesses. Right? I wouldn't have started my own business if I hadn't. If actually, I would have started my business, but it wouldn't have been as successful as it is today without Bitcoin. So over time, we're going to see a lot more people who start very successful businesses because of Bitcoin. And then on top of that, the people who start businesses because of Bitcoin, the people who start a Bitcoin related business, they're going to have their treasury in Bitcoin. They're going to have their savings in Bitcoin. So what that means is over time, even if the service that they provide doesn't do very well, their Bitcoin is going to appreciate and they can pivot to another kind of business.
Yeah.
So it's just it just Bitcoin gets that ball rolling and then it keeps going and going and going. Instead of having multiple accounts with multiple banks, instead of having lines of credit with different companies, you can just have your Bitcoin stack. If you want to borrow Bitcoin, you get a loan, get a great term. Maybe right now they're like 1 year. Over time, I think that's going to improve. So you don't need all of the things that you needed in the legacy financial system. My personal job, my job as a fixed income analyst would have been obsolete
Hmm.
if it weren't for fiat currencies.
Yeah.
It wouldn't have been there. I would have none of my jobs if it weren't for fiat currencies. All of my jobs would have been just wiped out. Even the current work that we're doing, like the work that we're both doing right now, if fiat didn't exist, then the work that we're doing would be irrelevant because people are just going to save in Bitcoin.
Yeah.
It's so much easier. You don't have the governments wouldn't be able to provide the same kind of tax benefits because they can't just print money. So they would just charge you. The way that I see it, I don't know, maybe you agree. The way that I see it on a Bitcoin standard, there would just be a consumption tax. That's it. Even then, I mean, I don't even think they're going. Certain countries aren't even going to need to charge taxes because they're going to have Bitcoin, and over time, that Bitcoin is just going to keep appreciating, and all of their expenses are going to be run through that Bitcoin.
Yeah. No, and I feel like it forces everything to the local level, which,
Yes.
I think a lot of people would like to see more and more of that, and only things that are absolutely necessary, like defense at, that kind of spending at the federal level. But the actual things you need from the government are found at the local level through your local government. And then, if there's things outside of that, you have a strong community of friends and family and church community and that kind of stuff that kind of is supposed to fill the gap. And I think we're probably really aligned on this of like, well, if everyone is, Bitcoin has basically trained you to be, frugal with your money, and spend less than you make in a month, and so you have savings, and then those savings appreciate. You are able to then provide for someone, for some amount of time to help them get back on their feet, if they do, for whatever reason, fall in hard times. So yeah, it's very interesting. I've always felt that the world on the other side, where Bitcoin is the standard, is very hopeful. It seems that the path to get there feels chaotic, and it feels like we're actually in that right now. And we've been in there. We've been in that spot for a while now, and things are, I would argue, maybe ramping up. Would you agree with that? Just maybe across the board, just chaos.
Yeah, of course.
Okay. I want to like end this with how you deal with some of the common, things I'm sure that get brought up in your consultation calls. If you could talk a little bit, maybe first, about volatility. How do you approach the conversation when someone comes to you and says it's too volatile, and I just can't ride that wave. Maybe it's because they're too old and they need the income, or it's just because they just don't have the stomach and they're fearful that they will end up selling, which is reality. I've seen that even in my own practice. People bring a 1099B, and it's like, they bought at the top and they sold at the bottom, and they obviously didn't know what they held, right? So how do you approach that conversation?
I'm just sharing my screen there. Do you mind just sharing that?
Yeah.
So this graphic, the great part of this graphic is that it shows you the day-to-day moves, and then it shows you the 4-year moving average. So this chart has answered so many questions for so many people. In the day-to-day, Bitcoin's price will be extremely volatile, but over 4-year periods, the 4-year moving average, so the average price for the last 4 years, and it keeps rolling forward. So what happens here is the oldest day falls off,
Okay.
and then the newest 1,458 days are used to calculate the average price of Bitcoin. So if you take a look at the price here, over time it just goes up. The
Yeah.
line just goes up. The gold line at the bottom there just goes up. The price on a day-to-day basis may be volatile, and we see that. I completely get it. But if you hold for 4 or more years, then you're doing great. You're going to do very, very well. In contrast, on the legacy in the legacy financial system, um, I wouldn't hold stocks for anything less than 10 years, maybe even 12 or 15 years. No matter how many stocks you have, I wouldn't hold them I wouldn't hold them for 4 years. No matter what your goals are, 4 years is way too short. No matter where the market is, in the next 4 years, the stock market could be way lower than where it is today. But I think that with Bitcoin, the way that it is, the finite supply, the fact that most people don't have any, most people have zero Bitcoin. Because of that, over time, the demand is going to keep increasing and the supply of Bitcoin available to be bought is going to keep decreasing. So we're going to see that over time, the price will keep rising. The volatility is painful. I get it, but that's the cost of owning Bitcoin. If you don't want to own Bitcoin, then you're going to massively underperform. If you don't want to go through the volatility, you're going to massively underperform. The feelings that come with the volatility, that's all they are. They're just feelings. It's your mind having a fight or flight response where you want to sell your Bitcoin because you think it's going to zero. Like I said, it's just feelings. If you just leave it, you do nothing with it, you're going to do very well. And that other question that you asked, people need income. That's where the cash and Bitcoin portfolio comes in.
Hmm.
So if you need cash, you can use the cash balance that you have to pay for your expenses. And then over time, if you need to, you can rebalance. Let's say Bitcoin's price goes up, you can add more cash to your portfolio, and then that way you have a longer runway, just to make sure that you don't lose your wealth. You don't have to sell if Bitcoin's price falls. So the cash flow is resolved by the cash in your portfolio, and then the volatility issues are resolved by just waiting. That's it. You just wait.
Yeah.
If somebody bought in 2021, they would have seen their portfolio drop from let's say they had one Bitcoin, they would have seen their portfolio drop from 68,000 all the way down to 16K. But if they did nothing, you literally have to do nothing. That's it. Nothing.
Yeah.
If they just waited until today, which is not even 4 years from then, they would have been up 50, 60%. So just wait. That's it. All you got to do is wait. There was a study done. I don't know if this was accurate or not, but there was a study done by Fidelity. Some people say that it wasn't a real study, but they said that the best performing accounts that they have are related to people who passed away. And
Hmm.
why is that? It's because they couldn't log in and they couldn't
Okay, that
sell,
makes
right? So
sense.
if they just held, their assets keep growing and growing and growing. So that's all you have to do. You just hold. That's how you deal with the volatility.
Okay, that makes perfect sense. Have you ever come across this newer company called Stable Channels by chance?
No.
So it's very interesting. It's let me see if I can find the website. I'll share the screen. Um, yeah, here it is. It's this guy actually who lives in Louisville, which is where I'm in. Um, present, share screen. So it might end up being interesting. You see my screen?
I don't.
Oh, you don't?
You just have to. I think you probably just have to hit present at the bottom there,
Okay.
or share screen or whatever.
Well, I'll just describe it, but just so
Okay.
everyone, it's stablechannels.com. It's a way basically for two parties to go into a two of two lightning contract, and one side wants a stable USD value, and the other side wants they want to keep the exposure, the volatility exposure on Bitcoin,
Oh
and they
wow.
actually take their own their own side of the channel exposure, but they also take the other side's exposure. So the example
Almost
that
like a leveraged
Tony,
bet.
yeah, exactly. But it's like a peer, it could be a peer to peer thing. So you and I could both open up a channel. You would put in one Bitcoin, I would put in one Bitcoin. Let's say that let's say that I'm bearish, or let's just say I'm a business that has I want to keep it at a certain level for payroll, or just like a cushion within the operating account. So you would say, all right, I'm going to hold you stable to 100K USD. And so if it goes down, you end up having to contribute more Bitcoin to keep me stable at 100K. But if it goes up, then you capture the upside of your Bitcoin plus my Bitcoin.
Oh
Um,
wow.
yeah, it's a very interesting It's a very interesting idea. It's been presented. I go down to the Bitcoin Park down in Nashville, but he's launched it. It's out in the open at this point. And I can't remember if he has a service provider that's on the other side, or if it's peer to peer, or if it's going to end up being both. But at least how I remember him originally describing it was it would just be peer to peer. It'd basically be one person that's ultra bullish. They're going to take the 2x volatility side of the equation, and the other side is someone who is maybe not bearish, but they need a stable dollar set for their Bitcoin. And then at the end, everyone basically can close out the channel at whatever amount of Bitcoin that it ends at. So I guess there's some kind of duration. So, anyways, I don't know. It might just be something to look into. It's stablechannels.com. Yeah.
Yeah, that's pretty cool, but I would only do that if there's like, let's say for example, you're locked in for 4 years.
Mm,
Because
okay.
if it's like you can sell it whenever you want to, the other person could just close their position and they could just walk away with their money
Absolutely.
with
There
your money,
definitely has to
right?
be some duration so that
Yeah.
you can't just be like, oh, I'm up, I'm getting out while I can.
Yes.
So, anyways, I'm trying to think if there's any other. I know there's a couple other that came to mind, and they're not coming back to my mind. I guess, are there any pushbacks that you get on a regular basis? Maybe one that comes to mind right this moment is how do you describe to someone how you're so confident that we can achieve a 30 to 40 to 50% CAGR over the years, maybe over a 4-year stretch on average. Like, what data do you generally pull in to support that?
There are two ways that I look at this. So there's this post from Jesse Myers on X where he shows you that Bitcoin is such a small portion of total global assets. So right now, Bitcoin is only 0.2% of global assets, but Bitcoin is the best store of value
Yeah,
by far. There's no question about it. There's no competition. You can't, real estate can't compete with Bitcoin as a store of value. Like if somebody wants to purely use something to save for the future, real estate can't compete. Same thing with index funds, is way too much risk. Same thing with individual stocks. Again, way too much risk. Same thing with bonds. I mean, you know what the issue with bonds is. The returns are printed out of thin air.
yeah,
So the way that I see it, right now it's at 0.2%. Over time, all those other assets will continue to grow. So right now, all of those other assets are worth $998 trillion. They'll continue to grow, but Bitcoin will grow at a much faster pace as value moves from those other assets into Bitcoin, as people figure out that Bitcoin is the better store of value. So people are going to sell their bonds, they're going to sell their stocks, they're going to sell their real estate, or even if they don't sell anything, even if they just direct a small portion of their portfolio towards Bitcoin. Let's say they say that, okay, going forward, my dollar cost average is going to be 90% in stocks, 10% in Bitcoin. That's going to accelerate Bitcoin's growth because it has a finite supply. It has a finite supply. There's no limit to how many companies can exist. Companies will continue to There will be more and more companies in the market, and it'll continue to the market will continue to evolve, the stock market. More and more companies will come in. Companies are a dime a dozen. More houses can be built at any time, but you can't create more Bitcoin. So over time, as more people want to move more of their wealth into Bitcoin, let's say they go from 10%, and then over time they figure out what Bitcoin is, they go to 20, 30, 40, 50%,
yeah,
and that'll keep rising because Bitcoin isn't held by the majority of people, while stocks and real estate are held by the majority of people who have savings. The people who can access them have bought them. There's also the other side of things where anybody in the world can access Bitcoin. Literally anyone in the world can access Bitcoin. Anyone in the world can buy Bitcoin, but not everybody in the world can access stocks. Not everybody in the world can access prime real estate or the U.S. Treasury market. So, and there's no guarantees of
right,
the returns going forward. There's also the chances that Bitcoin may be extremely volatile and maybe even more volatile going forward because we have more and more money going in. We have these treasury companies that are taking on massive amounts of leverage. You don't know you don't know who is actually not buying the Bitcoin that they're saying they're buying.
right,
So over time, the volatility may be maybe even higher, but all of those factors are going to contribute to a higher Bitcoin return, a higher Bitcoin price over time. And because the US dollar doesn't have a bottom, it can lose 99%, then it could lose another 99%, then it can lose another 99%. That just means that Bitcoin's return can stay stable at 30, 40, 50% per year. If if the purchasing power of Bitcoin increases by 50%, or sorry, if the price of Bitcoin increases by 100%, that means that the US dollar has lost 50% in terms of Bitcoin. So over time, that could continue to happen. The US dollar can drop 50%, then it can drop another 50%, then it can drop another 50%, and it can literally keep going. All they have to all that the US government has to do is borrow more money, add it to the economy. All the Federal Reserve has to do is again print more money and dump it on the economy.
Yeah.
There's no floor for the US dollar, so there's no ceiling for Bitcoin.
Yeah. Yeah, do you ever flip that? I know you brought that chart up about the volatility of Bitcoin. Do you ever flip it more so on the volatility of the dollar system that we live in? That's basically the measuring stick that's constantly being shrunk and expanded, and it's hard for everyone to find good footing in that system, right? It's like
Yeah.
trying to walk on wet mud.
Well, that would just be the price of everything else, right? Like even the price of apples goes up in terms of US dollar. So the US dollar is a worse store of value than apples. Obviously, apples don't, you can't use them as a store of value because they won't, they'll rot.
Right.
But even the price of apples is increasing in US dollars, and you can grow apples on trees. Like people say money doesn't grow on trees. You can literally grow apples on trees, and apples are increasing in value faster than US dollars, which is, I mean, that's kind of scary because what does that mean? That means that our money doesn't even have to grow on trees. It's just created out of nothing.
Right.
So over
This
time,
is
that's where the volatility of the US dollar comes from. As the US dollar just keeps losing value, we know that you can't buy the same amount of things. You can't buy the same house that you could a few years ago. You
right.
can't buy the same car that you could a few years ago. Everything has decreased in value, as in everything has decreased in terms of the quality. It's been debased because the US dollar is becoming more and more worthless every day.
Yeah, there was a website, I don't know if you ever referenced it, priced in Bitcoin
I have.
21.com. Did you
Yeah,
ever reference that?
great website.
Okay, so I just saw, so it's been down for a little while,
It's
and
been down, yeah.
and it looks like the Twitter account actually tweeted back on April 5th that you can go support the project on Geyser Fund, and yeah, I would encourage anyone that's listening that is able to. I think I'm going to go. I haven't. I just saw this, but I think that site was so helpful a reference when I'm trying to show people exactly what you're just describing, the world price in Bitcoin, and how, as you and I both know, your life gets cheaper over time if you
Yeah.
save in Bitcoin, which is just it's life changing. It really is for you and your family to be able to afford more things and be rewarded just by saving in a better money. It's a beautiful thing. So all that to say, hope that comes back soon so that we can continue to share that with clients, and hopefully by the time that some people are listening to this episode, that priced in Bitcoin 21.com, that's back out there. So because you could even see like eggs.
Yeah.
I mean, it's just great. It was a great site. So
Price of
um,
houses, yeah.
I know that we're coming up on time. I want to make sure I give you an opportunity, just any closing thoughts, and then if somebody, say somebody has a client that they know their limitation as an advisor, and they're like, look, it's not something that I can really speak to intelligently. I want to make a referral. Where can people either find you or send their clients to you in order for them to work with you and understand Bitcoin and make an allocation?
So I have tons of YouTube videos. If you have any people that you want to teach, they want to help, just get them to watch my free YouTube videos. If they want to, they can book a meeting with me. Just show them the free YouTube videos. Start with the free stuff, right? I mean, people need to, before somebody books a meeting with me, I want them to make sure that they actually like the stuff that I talk about. They align with what I say. So show them my free videos. If you just go on YouTube, you can search for me. It's Rajat Soni. I just talk about Bitcoin in literally every single video. I have 400 videos just talking about Bitcoin, breaking it down, talking about personal finance concepts in relation to Bitcoin. So start with that. But if you want to book a meeting with me, in every single video that I have, there's a link in the description where you can book a meeting with me. You can join my community. There's a free trial. Go check it out. I think it's worth it. Lots of content there. We do weekly live sessions. I think I think the most important thing is just trying to wrap your head around what Bitcoin is, the basics of it, and you can do that for free. I would start with that. Start with the free stuff, and then over time, as you have more complicated questions, book a meeting. I think that's the best way to go.
Perfect. Yeah, I would agree. When I got into the space, I did basically the exact same thing.
Yeah,
Found free resources, did end up purchasing a few books. And then I ended up working with someone very similar to you, just to make sure I had all my questions answered. So would highly recommend if anybody out there is wanting to just be completely sure, especially if someone's talking about a lot of money, that they're
yeah,
looking to allocate it. It's very prudent to spend some dollars to just ensure that you understand what you're getting into. And also, I'm sure you speak on this as well. I see this on the advising side. You're very well equipped to explain why Bitcoin is different than other cryptocurrencies, which I think is extremely important for people who are dipping their toe into, going down the YouTube rabbit hole of Bitcoin. The algorithm, I think you probably agree with this, can pretty quickly turn you on to other things that you should probably not focus on. And
yeah,
so,
exactly.
yeah, so it's important to have someone like Rajat who can keep you focused and grounded and answer all the correct questions. So, well, it's been great. I really appreciate you hopping on. I'll keep you on after. I got just a couple other things to talk to you about, but I really
Of course,
appreciate you joining us and sharing all your different insights. And yeah, if anybody has any questions, they know where to find you. Okay. Thanks so
awesome.
much.
Thank you so much for having me.
Absolutely.